Beyond Meat's stock has been on an absolutely roller coaster ride lately. But was its recent massive surge a real sign of a comeback, or was it just a flash in the pan? Well, today we're going to dive into a technical analysis report piece by piece and figure out what the data is really telling us.
So let's start here. Just a few weeks back, on October 22nd, this is where the stock peaked, $7.69. I mean, a dizzying high that felt like it came out of nowhere. Keep this number in your head.
And this is where we are now, $1.22. Just think about that drop, from over $7.50 all the way down to this. That is an 84% crash from that peak. The fall has been just as spectacular as the rise.
So this is the big question, right? What is really going on with Beyond Meat? Was that incredible spike a genuine sign of life, or was it just a temporary blip in a much, much bigger story? Well, this technical report is going to give us the clues we need to find out. Okay, so here's our game plan. We'll start with the stock's recent wild ride. Then we'll zoom out to look at the underlying trend. After that, we'll check out the momentum and volatility, see what could happen next, and finally get the report's final verdict. All right, first up, let's retrace the steps of this insane journey. Because to really understand the crash, you gotta first understand that surge.
Take a look at this timeline. Back in September, things were pretty quiet, pretty boring. Then, boom, mid-October hits, and it's like a rocket launch. The price just explodes from 52 cents to that peak of $7.69. And look at the volume on that peak day. 2.2 billion shares were traded. That's an absolutely huge number. But of course, just as fast as it went up, it all came crashing back down.
So that short-term story is just chaotic. To get a real sense of what's going on, we need to zoom out a bit and look at the underlying trend. This helps us see past all that daily noise and find the real direction the stock has been heading. And one of the best tools for that is the moving average. It's pretty simple, really. It just smooths out all the crazy price swings to show you the stock's average mood over a certain time. And the key rule is, if the current price is hanging out below that average, it's generally not a good sign.
And wow, this table really lays out the problem. The current price isn't just a tiny bit below average, it's over 40% below the 50-day average and almost 60% below the 200-day average. You can see it right there. The longer the time frame you look at, the stronger that downtrend looks.
So the bottom line from this part of the analysis is this. That crazy spike we saw in October, it wasn't a real change of direction. It was a wild, temporary exception to what is otherwise a very strong and very clear downtrend. Okay, next up, momentum and volatility. So if the trend is the direction the car is heading, you can think of these as the forces driving it. Is the engine revving up or is it losing power? And how bumpy is the road ahead?
The report is pretty blunt here. It points to extreme volatility and says the stock is behaving in a way that's typical of meme stocks or even pump and dump schemes. So, in simple terms, the road ahead is incredibly bumpy. You have to expect massive, unpredictable swings.
So what about that engine? Is it gaining power or losing it? Well, most of the key indicators are flashing red. They're signaling strong downward or bearish force. But, and this is a really important detail, some of these signals are in what's called oversold territory. The best way to think about it is like a rubber band that's been stretched way too far down. It doesn't mean it's going to fly back up, but it does suggest that a short-term snapback or a little bounce is definitely possible.
Okay, so when you put all of that information together, what happens next? Where do we go from here? The technical analysis actually lays out two very distinct paths forward, a bullish, or optimistic scenario, and a bearish, pessimistic one.
So here are the two possibilities. For the optimistic, bullish scenario to play out, the stock has to break through a key price ceiling at $1.32. If it can do that, the analysis suggests it could move towards $1.68, or maybe even $2.10. On the flip side, the pessimistic, bearish scenario kicks in if the stock falls through its current price floor at $1.16. If that floor breaks, the price could drop to new lows, maybe even all the way down to 65 cents. All right, time for the final verdict. We've looked at the wild timeline, we've looked at the underlying trend, we've checked the momentum. Now let's see how the report puts all these clues together to reach a single conclusion. And this chart really gives us the final score. After analyzing 120 different technical indicators, 42% of them are bearish. That is a really significant number of signals all pointing in the same negative direction. And really, the report's own summary couldn't say it any clearer. It flat out labels this stock as having high speculative risk.
So, what's the final recommendation here? Well, the report calls this a high-risk stock. It suggests either just avoiding it, or for more advanced traders, maybe even betting against it. It does mention that those oversold signals we talked about could create a very short-term buying opportunity on a dip, but only with a super tight stop loss, basically an automatic parachute to get out if things go wrong. And just to be clear, this is all based on a technical finding. It is not investment advice.
And you know, all of this leaves us with a final and pretty crucial question. In a market that's so often driven by social media hype and crazy news cycles, a story like Beyond Meat's really forces us to ask ourselves, where do you draw the line between a calculated investment and just a high-stakes gamble? That's definitely something to think about.